Welcome to another infographic instant with Bryane Michael. In this episode, we're going to be asking whether the quality of Hong Kong stock market affects China's solar industry shares. This is from a paper which finds that New York, as opposed to Hong Kong, has a relatively large number of Chinese solar panel companies listed there. We've been discussing over this series of infographics where different financial centers locate in order to take advantage of new industries, particularly in this paper looking at the mainland China's solar panel industry. And what we find is that in New York there's an unexpectedly large number of Chinese companies listed there. That's inexplicable necessarily by the amount of money that can be raised and other fundamental factors. So we have to ask ourselves, well, what is it about the market and market quality which might affect the decision to IPO and list in various jurisdictions? And to simplify the argument that we discuss in the paper, you can think about the reasons for listing in a market along a continuum. So on the left-hand side of this continuum, think about the company fundamentals. So the decision to list and changes in share prices more focus on changes in underlying earnings, underlying future profitability, asset values, liabilities, things that are tied to the company. On the right-hand side of this continuum, we might see the valuation of a company, the decision to list on a market, as determined by market peculiarities rather than by the underlying fundamentals of those companies themselves. So rather than the income earned by the company, which is driving market prices, it might be the income earned by the investors in those companies, which are driving the prices of those companies. So as investors earn more money, they bid up share prices, and that is completely unrelated to the quality of those shares in themselves. What we see is that there's no apparent difference in market quality. There's nothing necessarily different about New York as opposed to Hong Kong, which would explain a listing decision or which would explain changes in share prices. So we show the changes in share prices for two companies listed in the US and two companies listed in Hong Kong. We cannot see any noticeable differences in these share prices simply looking at where they are listed. If we turn our attention to the beta, which is the relative volatility of these share prices, or the price to sales ratios of these companies, even average volume, it's very difficult to see differences based solely on where the company is listed. Therefore, we cannot conclude that there's something bad about the quality of the Hong Kong Stock Exchange, which is discouraging mainland companies from listing in Hong Kong as opposed to listing in New York. This has been another infographic instant with Bryane Michael.